Thank you, Paul, and good morning. I'm very pleased to be here with Senior Deputy Governor Carolyn Rogers to discuss our monetary policy report and today's policy decision. Today, we lowered the policy rate by 50 basis points. This is our fourth consecutive decrease since June and brings our policy rate to 3.75%. We took a bigger step today because inflation is now back to the 2% target, and we want to keep it close to the target. Aujourd'hui, on a abaissé nos taux d'intérêt de 50 points de base. Cette quatrième baisse consécutive depuis juin fait passer le taux directeur à 3,75%. On a fait une plus grosse réduction aujourd'hui parce que l'inflation est de retour à 2% et on veut qu'elle reste près de la cible. In the past few months, inflation has come down significantly from 2.7% in June to 1.6% in September. Recent indicators suggest it'll be around 2% in October. Price pressures are no longer broad-based, and both our measures of core inflation are now below 2.5%. Our surveys also find that businesses and consumer expectations of inflation have shifted down and are nearing normal. All this suggests we are back to low inflation. This is good news for Canadians. Now our focus is to maintain low, stable inflation. We need to stick the landing. Tout ça indique qu'on est revenu à un climat de basse inflation.
All of this suggests that we are back to low inflation, and this is good news for Canadians. We have now been able to bring inflation down, and our goal is to keep it stable.
It means the upward and downward forces on inflation need to balance out. Household spending and business investment have picked up this year, but remain soft. This softness has helped take the remaining steam out of inflation. But with inflation back to 2%, we want to see growth strengthen. Today's interest rate decision should contribute to a pickup in demand. The bank forecasts inflation will remain close to the target over the projection horizon. The upward pressure from shelter and other services is expected to gradually diminish. With stronger demand, the downward pressure on inflation is also forecast to dissipate, keeping the upward and downward forces roughly in balance. If the economy evolves broadly in line with this forecast, we anticipate cutting our policy rate further to support demand and keep inflation on target. The timing and pace of further interest rate cuts will depend on incoming information and our assessment of its implications for the inflation outlook. And as we've been doing, we will take our monetary policy decisions one at a time. Si l'économie évolue généralement comme prévu.
If the economy evolves broadly in line with this forecast, we anticipate cutting the policy rate further to support demand and keep inflation on target. The timing and the pace of further interest rate cuts will depend on incoming information and our assessment of its implications for the inflation outlook. And we will continue to take our monetary policy decisions one at a time.
Let me expand on what we're seeing in the economy and how that played into our deliberations. After stalling in the second half of last year, the economy grew by about 2% in the first half of this year, and we expect growth of about 1.75% in the second half. The economy remains in excess supply, and the labor market is soft. The unemployment rate was 6.5% in September. Job layoffs have remained modest, but business hiring has been weak, which has particularly affected young people and newcomers to Canada. Simply put, the number of workers has increased faster than the number of jobs. Looking ahead, GDP growth is forecast to gradually strengthen to around 2% in 2025 and 2.25% in 2026, supported by lower interest rates. This forecast largely reflects the net effect of a gradual pickup in consumer spending per person and slower population growth. We also expect growth in residential investment to rise as strong demand for housing lifts sales and spending on renovations. Business investment is expected to strengthen as demand picks up, and exports should remain strong, supported by robust demand in the United States. The decline in inflation in recent months reflects the combined effects of lower global oil prices, slightly lower shelter price inflation in Canada, and lower prices for many consumer goods like cars and clothes. Going forward, we can expect to continue to see some monthly fluctuation in inflation, but overall inflation is expected to remain close to target over the projection horizon, as upward pressure from shelter and other services gradually diminishes and excess supply in the economy is absorbed. There are risks around this inflation outlook. The biggest downside risk to inflation is that it could take longer than anticipated for household spending and business investment to pick up. Our recent surveys suggest businesses expect subdued sales, and their hiring and investment plans are modest. On the upside, lower interest rates could fuel a stronger rebound in housing activity, or wage growth could remain elevated relative to productivity. There's also elevated geopolitical uncertainty and risks of new shocks. Overall, we view the risks around our inflation forecast as reasonably balanced. And with inflation back to 2%, we are now equally concerned about inflation coming in higher or lower than expected. The economy functions well when inflation is around 2%. Let me conclude. L'inflation et les taux d'intérêt élevés ont été
inflation and other risks have had a stalling effect on the economy. We believe that lower interest rates will allow communities and businesses to remain active. By maintaining stable prices for Canadians and keeping inflation close to the 2% target.
And interest rates have been a heavy burden for Canadians. With inflation now back to target and interest rates continuing to come down, families, businesses, and communities should feel some relief. The bank is committed to maintaining price stability for Canadians and keeping inflation close to the 2% target. With that summary, the Senior Deputy Governor and I would be very pleased to take your questions.
Thank you, Governor. I'll just quickly go over the ground rules here. I've got reporters here in the room in Ottawa. I've got a couple on the line. I'm going to start here in the room. As usual, we'll ask people to limit yourself to one question so we can get to every media outlet. If I somehow forget to do so, please state your name and affiliation. And for those who are new here, please press the green button in front of you to activate your microphone, and then again to shut it off once you're done asking your question. Okay, we'll start here with questions at the back. I'll go to Pramit Mukherjee from Thomson Reuters, please.
Oh, sorry. Thank you, Paul. Good morning, Governor. Wanted to ask you that how fast do you think that the monetary policy, the policy rate should move back to a place where it is no more restrictive? Because clearly a restrictive monetary policy is still taking a toll on the economy.
Look, I mean, since we began cutting rates in June, we've been very clear about the direction. We've also been clear we're going to take our decisions one meeting at a time based on the best available information. So today, we decided to cut the policy rate by 50 basis points, so we took a bigger step. And that really reflected the fact that the information we've received in the last 2 months suggested it was appropriate to take a bigger step. So what is that information that we particularly focused on? I mean, first, obviously, inflation. Headline inflation has come down significantly. Yes, part of that is global oil prices. You saw a big decline, particularly in gasoline prices, and that can be volatile. But if you look beyond that, there are some more fundamental factors. Core inflation has continued to gradually ease, largely as we expected. If you look at shelter price inflation, it's still elevated, but it has started to come off, and that has increased our confidence that that will gradually continue to ease. we've still got excess supply in the economy. Labor market's still soft. You are seeing, the excess supply in the economy is putting downward pressure on many goods and services prices. You're seeing that particularly in consumer goods prices, which have been quite soft. And if you look at expected inflation, our own surveys of inflation perceptions, consumer and businesses' expectations of inflation have come down and are now nearing normal. If you look at the economy, it's growing, but the economy continues to be in excess supply. The labor market is soft. Our growth forecast hasn't changed a great deal, but we have revised down near-term growth a little. So you put all that together, to us, that suggested it was appropriate to take a bigger step today, so that's what we did. We've also indicated that if the economy continues to evolve broadly in line with our forecast, we do anticipate further cuts in our policy rate. And as I said, we're going to continue to take those one at a time based on the best available information. Our focus now is very much on keeping inflation close to the target. There's going to be some fluctuations. There inevitably will be some month-to-month fluctuations. We're focused on keeping it close to the middle of the 1% to 3% range. So, what does that mean? It means as the upward forces on inflation ease, we need demand to strengthen, take up the slack. In terms of the data we're going to be particularly focused on between now and December, look, I think it's both inflation and growth. We're going to get the third quarter national accounts. We're going to get a couple of employment reports. We're going to get a CPI release. So we'll be looking at all that data as well as any other information we receive between now and then, and we'll take our decision in December.
Okay, thanks. Next, I'll come over here to Mark Rendell from the Globe and Mail, please.
Thanks for taking the question. I'm wondering, at the Governing Council table, how much discussion was there of a 25 basis point versus 50 basis point move? And was there any discussion of an even larger cut, given that rates are still restrictive, inflation is back on target, and you want growth to pick up?
Mark, look, we had a good discussion. We always chew through the alternatives, but what I can tell you is, look, there was a clear consensus that it was appropriate to take a larger step today, cut 50 basis points. In response to the previous question, I really outlined, what we saw in the recent data and what that led us. Why that led us to cut 50 basis points today. There was also broad agreement that if the economy continues to evolve broadly in line with our forecast, that we expect we'll be cutting rates again. We'll be cutting rates further. We're going. We will continue to watch the data as it comes out relative to our forecast, and we'll take those decisions one at a time. You'll get the summary of deliberations in a couple of weeks, and you'll get a little more color around that. But yeah, I think the bottom line is there was a clear consensus that it was appropriate to do 50 today, and that's what we've done.
Okay, next I'm going to come over here to Randy Thantong-Knight from Bloomberg, please.
Hi. The bank has said that it would keep QT going as long as they're cutting for normalization, but 50 basis point cuts aren't really typical of normalization. Does this acceleration in the pace of rate cuts suggest that you will bring forward the timing for when you will end QT?
You want to say that?
Yeah, I think, Randy, our position on QT really hasn't changed. We've always said it'll operate in the background and it'll support our rate cuts. I actually think the way to interpret the decision we made today is about normalization. I think the way the governor just characterized our discussion was really a build of confidence in the direction that both the economy and inflation's moving. Back when we started cutting in June, we talked a lot about push-pull forces, and I think the council was worried that those forces pushing inflation up would would win out. They would be stronger than the ones pulling them down. We've had the benefit of time and more data and more discussion. And I think, the cut that we made today really reflects that increasing confidence that we're heading in the right direction. So, and QT is also heading in the right direction. We don't plan any immediate changes to it.